Hi and welcome to this introduction series about property investing. In this series, we've endeavored to teach you everything you need to know in order to start your property journey, in order to be successful. So what we've done is we've broken it down into 3 very simple steps and 3 major mistakes that you need to avoid if you're going to be successful. So the first video of this series, we talked about how to find property deals. So how do you get the right deals, the best deals? Next, the rest of the first step is the ability to analyze and calculate deals. So calculating deals is what we're going to be doing in this episode. So if you've ever been insecure about running the math, knowing your numbers, and understanding what your returns will be, well, fear not. By the end of this video, you'll know it perfectly and be able to keep moving forward. We'll also, in our course, you can access it on our website, Freedom Property Intensive. We'll teach you exactly how to analyze a property deal, to get all the data so that you know you're doing the math with the right figures and that you know what your rents will be, your valuations will be. So that's a very important course. You can find it on our website, momentumpropertyeducation.com. We also, in that course, go through project management, making sure you do the project correctly, that you get the results you're hoping for. In our last video, we talked about money. We talked about the difference between the left and the right side of the quadrants. If you remember from Rich Dad, Poor Dad, the cash flow quadrants, there's a difference between the left and the right side. And we talked about the 3 major mistakes, how people don't use leverage and think about everything too much in terms of their own money and their own time, rather than how to build a system that allows them to reach higher and greater results. We talked about setbacks, because you'll reach setbacks, how you overcome them, and how you handle the people around you that might not believe in you, and how you prove them wrong and then support them in doing the same journey. And then we talked about the importance of action, the importance of taking action. When you have an opportunity to take it, grab it, go with it to get the result you're looking for. Now, what we're going to be working on in this episode is the calculation part. I'm going to show you how to do calculations on deals, and I'm going to use my own journey as an example. As you might remember from our last video, we looked at the start of my journey, how I went from an employee to the dream of retiring early. And I tried investing in stocks, in bonds, in options, in precious metals, everything I could find that I could invest in, and I lost money on every investment. It ended with me saying, no, I give up. This doesn't work. There's a reason why people work till the age of 65. Well, as I said then, something happened that completely changed my life, and I'm going to continue that story now. I knew I was cruel and I left you there on a cliffhanger, so I'm going to put you out of your misery and continue that story. Well, what changed my life was reading the book Rich Dad, Poor Dad by Robert and Kim Kiyosaki. It is an amazing book, so I cannot say enough good about it, so please read the book if you haven't. If that's the one thing you do from watching this series, reading that book, it will have been worth the time, so please do. That book, what it did, it taught me about how to think around money, the concept of passive income, assets, liabilities, and they talk a lot about property investing. And I got so inspired reading that book, and me and my wife, we said, all right, property investing, that's the thing, that's what we're gonna do, but we have no money. So how do we do it? And I was very lucky to see a seminar, it was a live event in my area of a speaker who wanted to teach property investing. So me and my wife, we signed up, we went to the event, and it was a fantastic event. We learned about how property investing works, and we got really, really inspired. We chose to sign up for a workshop. It actually cost us about $1,000 or 10,000 krona. This was in Sweden, and 10,000 krona. We got really, really inspired, and we felt, wow, this is our next step. And we went to the workshop and we learned all these things. We learned how to find deals, how to analyze them, how to calculate them. We learned about project management. We learned about money. And we started getting the tools in place that we could put into play so we knew how to do this. The one problem for us was we wanted to invest in the United Kingdom, which is a much better property market than Sweden is. So we decided to get ourselves a mentor, and we got ourselves a very successful property investor in the UK who agreed to teach us. He was kind enough to charge us about £15,000 for 3 days, so that was nice. Good daily salary, right? But he helped us set up our company, give us our initial contacts. But as you might remember from our first episode in this series, whilst our journey started very, very well, we had challenges, and actually we essentially went bankrupt. Thanks to the help of us getting to know Kim Kiyosaki, working with Tony Robbins' organization and the Zuckerberg Institute, we were able to run a turnaround and turn around our business and put ourselves in the position that we are in today. But it was a tough journey. But we started out really well. We started investing, and I was actually featured in a magazine, in an online magazine in the UK, where they interviewed me because in just a year we'd built £1 million portfolio. Now we had mortgages, so it wasn't £1 million of equity, but from starting from essentially zero, we had a portfolio valued at about £1 million within 12 months. And that was a very exciting journey. It was very challenging, and it was after that that the crash came, but it looked really good at that point. And I'll talk a little bit more about the crash in a moment. But I thought we'd start this series by doing the calculation on our first deal. So after our workshop, we went to the UK, we sat down with our mentor, and we learned what we needed to know in order to be able to invest. And we went up to Scotland and we found our first flat. And I'm gonna ask our editor to bring up a PowerPoint where I'll show you the numbers, and we're gonna do the calculation together on the numbers, and I'll tell you about the deal with some pictures there. So editor, please bring up the PowerPoint. All right, so we're going to do a calculation here together on the first property deal we ever made. We had just been working with our mentor, and he had introduced us to a sourcing agent up in Scotland. So after our mentorship, we went up to Scotland to meet up with her, and she had found a gorgeous little flat in Glasgow on a street called Gallowgate. So Gallowgate was a small studio flat, only like 25 square meters. It needed a lot of work, but here you can see the outside of the building. And she'd already had a builder come by. She negotiated the price, so everything was ready. We had the home report, so we had the survey. We could go through all the information. So we sat down together and we went through it. So first, when you do the calculations, what you need to know is how to calculate your cash flow. So that's what we're going to do first. So you got your cash flow is your rent minus your costs. And your ROI is, well, your return. So your ROI is your annual cash flow divided by your invested capital. So we'll do this a couple times. But so she had found us this little buy-to-let flat. We could purchase it for only £13,000. It needed £11,000 of refurb, and we had other costs of about £1,500. Obviously, in Freedom Property Intensive, we'll go through exactly what those costs would be. So our total cost would be $13,000 plus $11,000 plus $1,500. So a total of $25,500. And that doesn't sound like a lot. And in property, it isn't. But it was a small flat in Glasgow, and we knew it was going to have a rent of £350. And what's great is this flat has been ticking like clockwork since we bought it. It's got a stable rent of £350 a month. We've never had any voids. We've had tenants move out, but we've always had new tenants move in right away because we've been marketing it when as the tenant has been in their period before they moved out. So it's been a fantastic property. We pay 10% to our management agent, our letting agent who runs this for us, and we put away 10% for monthly operating expenses. So ongoing refurb, council tax is covered by the tenant, but insurance and things like that. So if we do the numbers now, cash flow, remember that's rent, and then you subtract your costs. So our rent is £350 minus our letting fee, which is 10%. Yes, 35, minus our monthly operating expenses, 10%, and our cash flow is £280 a month. Now that might not sound like a lot, but imagine we had spent 10,000 krona going to our first workshop, so £1,000 for our workshop. We had then signed up for a mentorship and paid £15,000, and then we'd spent another £25,500 on the property. So we were up over £40,000 in expenses. And when this cash flow hit our account, that just told us it works. We're making money. Yes, we've spent £40,000, we got £280 back, but we knew we would now have £280 every month for the rest of our lives. That is an amazing experience to feel. So let's see how good the deal is. Return on investment is what we use to compare different deals to each other. So let's take a look. We had £280 per month coming in, 12 months of the year. So every year we're making £3,360. Divide that by what we invested, and we have a 13% return, which is actually really, really good compared to the stock market where the average is 10%. And we got 13. And actually, you haven't even brought in here that we also have capital increase in value. So this property is ticking a stable cash flow of 13% per annum. That is really, really good. what you might have noticed is we didn't take a mortgage on this property. And that's okay. We didn't take a mortgage. It was a very small property. If we had, we could have gotten the returns even higher because we would have had to invest less. But in this case, we didn't because it was such a small property, and this is how it went. So it's a very cool deal. And so back to the presentation. All right, great. So that was Gallowgate. That was our first little buy-to-let. We still own that buy-to-let, and it's still generating cash flow. I love that flat. It's still generating stable cash flow, which is great. It's exactly what we're looking for. And our journey continued. After that first one, we did deal number 2, deal number 3, deal number 4, and finally deal number 5. And deal number 5, I'm gonna let you run the numbers on. So it's an HMO instead. It is a house that we bought that we're renting out by the room. So it does come with some different numbers. So I'm gonna ask our editor again, bring up the PowerPoint, and we're gonna run the numbers again. And this time, you might wanna pause the video and watch it in slow motion so that you can do the numbers yourself rather than just getting the answer. So, editor, please bring up the PowerPoint. Okay, so let's start looking at this next property deal. So this was a property we bought in Liverpool. This was the fifth deal we ever did. It is on a road called Fazakerley Road, near one of the large hospitals in Liverpool. And what we realized was, as you can see, this is a terraced house. We saw we could redo the floor plan, get more rooms, and instead of renting this out to a family, we could rent it out to doctors and nurses. Each one would then pay obviously a less of a rent than a family would for the whole, but because we could make this into 5 rooms, we would get a much higher total rent and a higher ROI as a result. So we decided to make that decision. It has worked very well, and we still own this property, and it still gives us cash flow. So we've been very, very pleased with this deal. Well, let's go through the numbers and see what you think about it. So remember how to do the calculations. Our cash flow is our rent and subtract our costs, and the ROI is our annual cash flow invested divided by our invested capital. And when I say invested capital, I mean our own capital we've put in the deal. So if we have a mortgage, that would be subtracted from the invested capital. So let's go through the basic numbers and then pause this video so you can do the math yourself and see what you get. So I'm going to give you the overview and then you do the numbers yourself. So this is, as I said, an HMO. We bought the property for £71,000. We refurbed it for $31,000. So if you compare this to Gallowgate, you realize that it's a lot more expensive. It's a bigger house, it's a bigger building, but also we made it into an HMO, and that does require more work. You fireproof the property. You do work in the floor plan. You have to furnish the property. So there's a lot more things to think about in an HMO than you have to in a buy-to-let. So we're coming out with a separate video on HMOs, so make sure to subscribe to our channel to get that information when that video comes out. That will go through more in depth what you need to think about when doing an HMO deal. We had other costs of £4,000. Obviously in Freedom Property Intensive, we go through each one of these costs so you know what they are. For the ease of this video, I've just gathered it up into one easy number. It was £4,000 for a survey, legals, sourcing fee, and all that. So now you could pause the video, do the math, see what this total is. The total cost is then $71,000 plus $31,000 plus 4, so $106,000. We knew we were going to get a rent of £1,300 because we'd done our due diligence. That's what's so key in a property deal, is doing your due diligence before you buy the property. So going into the deal, we knew we were going to earn £1,300. And obviously in Freedom Property Intensive, we teach you how to do this. Letting fees on HMOs are usually 15%. Sometimes you get them a little lower, but 15% is kind of industry standard. The monthly operating expenses, industry standard again, is 15%. As you remember from Gallowgate, it was 10-10. But industry standard is 15 on HMOs. It's a little more operating expenses. You pay the bills, the council tax, and there's just more maintenance and turnover in an HMO. I want to tell you, I actually put away more in my HMOs than 15% because I'm kind of conservative, but this is industry standard, so we'll use those numbers for this video. But just remember, we put away more. So if you want to be a little conservative as us, then do that. Now, in actuality on this deal, we did take out a mortgage, but because this is going to be the deal you do yourself, I want you to just pretend we didn't take a mortgage and calculate it without a mortgage. Obviously, with the mortgage, the ROI becomes much higher. We're just going to do this so you can practice in doing the math. In Freedom Property Intensive, obviously, again, we do the full math, full numbers, with mortgages, without mortgages, go through each cost. But now let's just practice the numbers, make sure it feels comfortable and you get it. So pause the video and run your numbers, calculate the cash flow and your ROI. All right, great. I'm betting that you paused this video, so I'm going to keep going. But if you didn't, pause it now, do the math, because the more you practice yourself, the better you get. Well, let's do it together now. So our cash flow is £1,300, that's our rent in, minus our letting fee of £195. So 15% of 1,300 is £195. Our monthly operating expenses, also 15%, so also $195. Again, we had a mortgage, so that would be subtracted as well, but we're not calculating with that now. So pre-mortgage, our rent is £910 per month. The ROI then, annual cash flow, so 910 times 12. I know you're not supposed to do equals and equals, but I did this easy for myself. I hope you can forgive me. 910 times 12, so total annual cash flow of £10,920 divided by our invested capital of $106,000 gives me a 10.3% return. That is still higher than the stock market, and I can tell you when you take a mortgage, this ROI goes through the roof. So this actually becomes a really good deal. So well done, you did the math, continue to learn, and let's get back to the video. All right, great job. So now you've done the calculation on 2 deals, you're starting to get a little more comfortable. And this is how we felt. We'd gotten some cash flow, we were rolling. But then the challenges started happening. And it really came out of the fact that our mentor was British, investing in the UK, and we were international. It's not the same investing in a different area than the one you live in as for someone who invests in the same area. And a lot of these things went wrong. We had the wrong sourcing agents who were bringing us the wrong types of deals that they didn't really have the experience that we required. We were very good at analyzing deals. We had very, very, very good due diligence, and we'll show you in Freedom Property Intensive how to do that due diligence. So that's an important part. And we did know how to calculate. The problem is if the project management from the sourcing agent, it doesn't go well, your analysis will be wrong because your costs will go up, your calculations will go wrong because the numbers are no longer correct. And of course, money, we structured our deal wrong. And there were a lot of the international aspects that went wrong, and that caused us to crash. Luckily, with the help of amazing people like Kim Kiyosaki, like Tony Robbins, like Randy Zuckerberg, like David, we have so many mentors that have helped us, and it's thanks to them that I can be here. So I'm always going to be thankful for that, and I'm always going to appreciate that help. And that's really why we set up Momentum Property Education. Because if you want to learn property investing, first off, this video series is a great start. You now have the basis. You know you need a sourcing agent to help you find the deals. You know the calculations now. You know the importance through that of being able to analyze a deal. You see how important project management is, and you know how to start thinking with leverage and money. So what's your next step? Well, we have multiple courses in Momentum Property Education to help you become as successful as possible and help you reach that goal that you deserve to reach. So by going to our website, and please editor, let's do this live so you can follow along. By going to our website, momentumpropertyeducation.com, and hitting the Academy, you can see all of our courses. I would recommend you start with Freedom Property Intensive. It's an online course that will teach you exactly how to analyze deals. It will go further into calculating deals so you get more proficiency at calculating deals. It will show you how to find the money and how to start your journey. So it's a very, very good course that will give you the basis of how to take that next step and how to start becoming a successful property investor. So it'll teach you the analysis, it'll teach you the calculations. We discuss the project management, we discuss the money so you can take that next step. Usually that course, you remember what I paid for my workshop where I got pretty much the same? I paid $1,000 for that course. I paid 10,000 krona. And you're going to get this. You're going to have lifetime access to this platform. You're going to be able to get in and get all the information and learn what you need to be able to get started, which is what it's all about, really. Start building cash flow so that you are not you're not stuck in a job. And if something happens, you don't have to feel insecure and not knowing what's going to happen to your salary. You'll know that every month you got money coming in, you can pay your bills and you will be fine, because that is such a blessing. It gives you the time to spend with your family. It brings you the confidence to do what you'd always dreamt of doing. It will allow you to travel. Whatever your dream is, having enough passive income will bring you to that reality. So that's why we offer this course for only 2,000 krona. That's under $200. But right now, as a thank you for watching this video, we want to take it another step, and we want to give you a really, really good offer. So thank you for spending this time with us. Thank you for learning. That's what it's about. And thank you for agreeing in that last video to help other people and to help them make a difference. So for that reason, we're going to give you a 50% discount. So instead of paying, 200 pounds for this course, you're getting it for only 97 pounds. So go to the website, sign up right now, hit the button, join now, and I hope to see you again. Please make sure also you subscribe to our channel on YouTube so you keep getting the new updates, new videos, and the free content we're putting out, which is incredibly valuable. But if you want it structured, if you want to know exactly how do you find, analyze, calculate deals, how do you make them start happening, well, this is the course for you. It doesn't cost you much at all. It is completely online. It's videos, content, exercises so you can get started. So make sure you sign up now. Good luck. You're going to smash it. Thank you so much for spending this time with us. And remember what Tony says, action is the name of the game. When you get an opportunity, take it. Make a decision, whether it's yes or no. You can absolutely say no if this doesn't feel right for you. But if it feels like a yes, take that decision right away while we have this discount. Make that step for your future now. And we'll see you soon. Thank you.